3 reasons why State Farm pulled out of the state of California of writing new fire insurance policies. Guys, Eric Hatch here with Century 21. I have taken so many phone calls, so many texts in regards to, Eric, what is your opinion and how is this going to affect the real estate market? So let me share with you my ideas and thoughts here as well. I was also able to interview Ralph Smith from State Farm down in Auburn, and he wanted to assure everybody who's a State Farm customer that they are not going anywhere. They still have all of their autos. They're still keeping their book of business with all of their the homes that they are insuring at the time, and also doing life insurance as well. So I want to share what he basically said is that throughout all of the nation, there's so many different natural disasters that are happening that other states are having similar problems, but it might be tornadoes or hurricanes. We just happen to be doing fire. And there are other companies that are still out there that are and will continue doing the insurance for the state of California. So I want to share what Ralph had shared with us, is that he felt that, put in an analogy, that we're in a big, large boat and the boat is taking on water. And so all the other states, California was dragging them down a little bit of sinking the boat. So the company of State Farm decided, you know what, we have to cut something here to make sure that the whole entire company does not sink, pretty much is what he basically stated. Number one is the Cal Fair. And so Ralph shared with me that Cal Fair right now is under funded at the moment, and possibly could be, if it goes insolvent and runs out of money. What he was sharing with me is that you would take the market share of all the large insurance companies, that Cal Fair could literally come to them and say, we are a $10 billion shortfall here. We need you because you have 25% or 40% or 30% of the market share to be able to make up the difference and demand that that insurance company pays that to be able to make Cal Fair whole again. And so they were limiting the risk of what they were doing in the state of California is basically what number one is. Number two is there's a Proposition 103 that was written by Harvey Rosenfeld that basically states that insurance companies in the state of California can only raise rates at 6.9% each year. Could not go any higher than that. And every dollar that is going and being collected in the system right now, they're paying out $1.38. And so there's an issue and a concern there because they can't raise the prices fast enough of what the insurance and the things of the devastation that's happening with fire insurance. Number three is basically something called reinsurance. It's where these insurance companies are able to go in and purchase a, let's say, max gross loss product. So if they had a mass loss, they were able to, let's say, insure another $10 billion. Well, lovely state of California does not allow insurance companies to be able to use that as a tax write-off. And so that has actually become almost double in price to be able to get this reinsurance. So another factor that is costing these insurance companies too much money and cannot use that as a like a business expense. And so those are the 3 reasons that Ralph shared with me in regards to why State Farm needed to and why the company decided to cut ties there with new insurance policies for fire insurance. Again, this might change down the road, may change in the future. Feel free to reach out to me if you have any additional questions in regards to fire insurance and how that might affect you personally in your own scenario. We have other companies that we can reach out to you to get you guys insured. Feel free to subscribe to our channel here and also click that little bell if you're listening to this on YouTube, and you'll be able to get instant notifications of other publications, other videos that I send out to you. Let's connect, guys. Have a wonderful day and take care.